Hi, it's Peter Schiff. It is Wednesday, February 20th, 2013. The price of gold dropped by about $40 an ounce today. Silver was down almost $1. In fact, we're trading at the lowest levels now since mid-2012. The downside actually accelerated late this afternoon after we got the release of the most recent Federal Reserve minutes, in which the Fed had a rather upbeat view or outlook on the U.S. economy. Now, I don't know why anybody puts any stock in what the Fed thinks. Remember, the Fed minutes from December, the last quarter of 2007, the Fed was even more upbeat, even though, unbeknownst to the Fed, we were already in a recession, and the worst financial crisis since the Great Depression was just around the corner. So I think the Fed has a pretty good track record of getting the economy wrong. Nonetheless, I think that rather upbeat view puts some additional selling pressure on gold and silver. Of course, the Fed gave no indication that it was going to stop its reckless money printing anytime soon. It's going to keep interest rates at zero. It's going to keep doing quantitative easing. There was some language about there may be needing a reason to adjust the size of their monthly bond and mortgage buying. Right now, they're buying $85 billion per month. But an adjustment to the size doesn't necessarily imply a direction. I think some people on Wall Street might have interpreted that to meaning that they might scale it back. I think they're more likely to increase the size of their monthly bond purchases, because if interest rates are rising and if the bond bubble has burst, then the Fed is going to have to print a lot of money to keep the air from leaking out. The whole U.S. economy is being propped up by artificially low interest rates, and in order to sustain them at that level, it's going to require more and more money printing and quantitative easing, bond buying, on the part of the Fed. I think, though, the psychology behind the recent decline in the price of gold has to do with the more benign outlook for the global economy, and in particular, rising stock markets. The Dow Jones, which was off better than 100 points today. In fact, the NASDAQ dropped almost 50. But as of yesterday, you had the Dow and the NASDAQ at multi-year highs. And I think a lot of people were jumping to the wrong conclusion that a strong stock market was bad for gold. That if the economy was improving and the stock market was strengthening, there's no reason to buy gold anymore. The crisis is over, and so people are selling their gold. Well, first of all, if you look at the correlation between gold and the stock market over the last decade or so, they've been positively correlated. They rise and fall together. The main difference has been that gold has risen faster than stocks. The fact that they're moving in opposite directions is a recent phenomenon. But of course, the whole idea that because the economy is getting better and the stock market is improving, although I would debate that the economy is getting better, but let's accept that on face value, you have to understand why it's getting better. It's getting better because of all the inflation that the central banks around the world are creating. It's the monetary stimulus. It's 0% interest rates. It's quantitative easing. That's why it appears that the economy is improving. That's why the stock market is going up. And far from being a negative for gold, that's a huge positive for gold. People who are saying there's no reason to buy gold now never understood the reason people were buying it in the first place. People weren't buying gold because they were worried about a crisis in the Eurozone or weak U.S. stocks. People were buying gold because central banks were printing too much money. It was inflation that drives the gold trade, not political uncertainty. But the fact of the matter is, a lot of people who never understood why the gold market was rising might have bought some gold recently just to jump on the train, and now they're leaving it at the first sign of trouble because they don't really understand what's going on. Think about this. Last night in New Zealand, the head of the Reserve Bank there announced that if the New Zealand dollar didn't weaken, he was going to intervene to do that. He was going to sell New Zealand dollars to drive the currency down. Also in Norway this week, the head of the Norwegian central bank threatened to do the same thing. He said if the strength of the kroner means that inflation in Norway is not high enough, they're going to intervene to weaken the kroner so that they have a higher rate of inflation. This is typical of central banks all around the world. Look at Japan. Japan is trying to create inflation, and they're succeeding. As a matter of fact, as a result of the weakness of the Japanese yen, Louis Vuitton just announced a 14% price increase in Japan. So central banks are actually striving to create inflation. Here in the United States, the Fed is saying they're going to keep on printing money until they believe that inflation years in the future is going to be above 2.5%. But they don't care what it is now. All they care about is what they think it's going to be in the distant future. And we all know that it doesn't matter what they think, they normally get it wrong. But the point is this: central banks are now aggressively pursuing inflation on purpose. Before the financial crisis of 2008, most central bankers had a goal of price stability. That was seen as desirable. That was their objective, stable prices. Now, few central banks actually achieved that, but that was their goal. Central banks, some of them had inflation targets or limits, such as 2%, but it didn't mean that you wanted to have inflation of 2%. It just meant that if it got above 2%, that's when the central bank would really have to tighten to bring the rate of inflation back down to pursue a goal of price stability. Well, central banks no longer consider price stability a desirable situation. Central banks now think that we need inflation, that 2% is not really a ceiling but a floor, and that if inflation is lower than 2%, the central banks get nervous and they think they got to print even more money to make sure that they have a sufficient level of inflation. Now, why do all these central banks want to create inflation instead of fight it? Because they understand that the whole global economy is now being propped up by inflation. Overly indebted governments need inflation. Central banks are trying to give governments an easy way out. They don't want to force governments to honestly default. They want to allow them to inflate their obligations away. Governments also, particularly in the United States, are trying to prop up asset prices, nominal asset prices, real estate in particular, but also stocks. The only way they can do that is to create inflation, keep interest rates artificially low, and keep on printing money. So far from there not being any more reasons to buy gold, which is what I'm hearing all the time, the bull market is over, there's no more reason to buy gold. There are trillions of reasons to buy gold. There's more reason than ever to buy gold. The problem is people just don't understand that. Now, we are now having potentially a correction in the stock market, which is overdue. We had a reversal day today, so we'll see if we get some more downside. And maybe if we get a pullback in the stock market, that's going to be a catalyst to revive interest in gold if, in fact, people believe that the reason gold is weak is because stocks are strong. But eventually, I think gold is going to be strong regardless of what stocks do, whether they're rising and falling, because you have to understand what's driving the stock market is not vibrant economies or growing earnings, it's inflation. It's debt, it's quantitative easing, money printing. That's why prices are going up. Now, I read an article today about oil prices, and the title was "The Mystery Behind the Rise of Gasoline Prices." The mystery. You know, and the article tried to uncover that mystery, yet not once did the article mention, and it was in the Washington Post, not once did they mention the Federal Reserve or quantitative easing or artificially low interest rates. No, I mean, it's easy to solve the mystery if you understand there's inflation. It's just if you believe there's no inflation, then you find it mysterious that prices are rising even though the government says they're not. The bottom line is I think bull markets climb a wall of worry, and they generally try to move with carrying the least amount of baggage. They want to get rid of the excess baggage. There are some weak hands that are being flushed from the market that I think, as again, came late, never really understood the fundamentals. I think you're getting a lot of stop selling. You have people who were trading these markets on leverage. They put stops beneath the market. Once the markets decline, you trigger those stops, you get additional selling, you break through some short-term technical indicators, you get more selling. I think we're getting a lot of shorts trapped into the market. Meanwhile, central banks continue to buy gold, even though investor demand was declining a bit last year. Central bank demand was on the rise. You have central banks in Russia, in China, India, around the world buying gold. Believe me, they have a lot more gold to buy. And I think the current weakness gives them a great opportunity to do it. In fact, one of the reasons that central banks haven't been aggressive or more aggressive in their gold buying is because they don't want to push up the price. Well, the best time to buy gold and not push up the price is when the price of gold is falling. So I would take advantage of what's going on right now, of people who really have missed the gold bull market, trying to make excuses for why it's over. I think it's still early in this cycle. I think the lion's share of the gains in gold and silver are in the future, not in the past. And I think the smart money is going to do the opposite of what the dumb money is doing now, which is they're selling. We want to be buying. We want to take advantage of this dip to increase our positions in gold and silver. And of course, if you have yet to take a position, now's the time to do it. I can't promise you that prices won't go any lower than they are today. In fact, they probably will. Prices always go lower than you think. But I think that if you try to hit the absolute bottom, more likely than not, you're going to miss the rally. I think when we get a rally, it's going to be explosive. And I think a lot of the people sold are going to be watching this from the sidelines. I think there's enough negativity built into the market that gold might have to top $2,000 an ounce before we bring some of these timid investors back in. You know, one more thought on this idea that because the economy is improving, there's no reason to buy gold. If the economies were contracting because central banks did the right thing, they raised interest rates and forced governments to cut back on their spending. If we had some austerity on the part of governments so that our economies can restructure, particularly in the United States, if the Fed acted responsibly instead of recklessly and took the punch bowl away instead of spiking it, that might be bearish for gold. But what they're doing now, monetizing all this debt, giving governments an easy way out, allowing them to continue to borrow and spend because they're monetizing it, that is the best thing that can happen to gold. It doesn't matter that it means stock prices are rising in nominal terms or that the economies appear to be expanding because we're spending all this borrowed money. In order to sustain this phony expansion, they have to continue to up the ante on quantitative easing. They got to print more and more money. Just like a drug addict needs more and more drugs to stay high, we need more and more cheap money to keep this phony economy going. And that is the best of all environments for gold. It's only a question of time before investors figure this out and start buying. We want to buy before they do that. That's all for now. This is Peter Schiff at Euro Pacific Precious Metals.